In this video, I wanted to share the top 3 tricks that online lenders are still using to make you believe that you're getting a better deal with them. Sometimes you might, but it's not always the case. And in this video, I'll share a story with you as well. So make sure you watch it till the end. But it's a particular situation where a buyer, I was competing with an online lender like I do on a daily basis, and they thought that the online lender was giving them a $2,000 better deal, less in closing costs. And when we got the fee worksheet, we compared apples to apples. That's not the case. So make sure you watch it till the end, and I'll share the story with you. I've been helping clients successfully finance their home purchase in the last 10 years, okay? And I've been dealing with online lenders for many, many years. They've always done this, but I see it happening even more and wanted to make this video to share these small tricks that they do to actually make it look like you're getting a better deal with them, and it's not truly the case. The first thing, and when I saw these stats, there's actually a stat that shows that 60% of all the mortgages closed in the country do not close with the same rate and terms that were initially discussed. That is scary as hell. Okay, so small tricks that they do is because, remember, you're not working with a local professional. You're working with someone, if it's an online lender, somewhere in a different state in a booth, and they're professionally coached, so they're getting good at this stuff. Okay, but when you look at what they offer, it's not even close, and they always mislead you. So I wanted to start off with the teaser rate. So the one thing they do, and they've been doing this for a very long time, and it works, is to get you in with a teaser rate. A teaser rate is a lower interest rate that they send out. They send it to your house. You see it on ads and TV everywhere. And they're like, rates are this. And, that doesn't mean that everybody can qualify for that particular rate. And then if you take a closer look and you read the disclaimer, it shows that you have to have 800 credit score, over 20% down, low DTI. So you're buying a house well within your ratios. But that really never happens. So if you have a 700 credit score, you want to buy a house with 3, 5, 10% down, that doesn't apply to you. And in most cases, and you also have a section in there where it says that these rates are with 2 or 3 points in cost and buy down. A point is basically 1% of the loan amount. So you can get this rate, but if you're buying a house for $400,000, it's going to cost you $8,000 to buy down the rate and get this particular rate. So the second thing I wanted to talk about is, one of the things that I'm noticing more often now is that they literally lowball your escrow. So your homeowner's insurance, your taxes, and then when they add at the end in your closing costs, so we're supposed to always have a 2-month cushion for homeowner's insurance and taxes, plus 1 year of homeowner's insurance prepaid in advance. But when you close, all mortgage payments are due on the first of the month, right? So if we were to close in the middle of the month, you skip the following month. So you have to have 3 months in escrows, and 2 months of cushion at all time, but you have to have 3 months. You have to collect, and that's part of your closing costs. So instead of showing that we need to get an additional 3 months for homeowners insurance and additional 3 months for taxes, they only show 2 and 2. So what that means is that if you are buying a house in a 400 price range, that extra 1 month of taxes and 1 month of homeowners insurance, that's easily $1,000. Okay, so just be very careful. They lowball your homeowners insurance and they lowball your taxes. Another thing I see more and more often is them basically marking certain fees as POC. POC stands for paid outside of closing. So when you get the fee worksheet, it's literally in a separate column. So, and these are items like appraisal and survey. So they have them listed on the fee worksheet, but it's in a different column, and it shows as POC, paid outside of closing, which means that these two, like the appraisal and the survey, are not included in your closing costs. So when you're looking at the comparison, when you're looking at all your closing costs, these numbers are not factored in. And then they'll say, hey, if you purchased a house in the past, you would probably catch this. But if you're a first-time home buyer, this is quite misleading to have it there and say, hey, these are your closing numbers. These are your final numbers, cash to close needed. But then plus you have to add the appraisal, and then plus you have to have the survey if the sellers can't provide it. So they're misleading you in a way where they're showing POC as paid outside of closing for certain fees that you still have to pay. They're just taking them out of the initial columns, and it's showing as less needed at the closing table, which is not true. You still have to pay for it. I have a client who was recently working on a pre-qualification with me, working on the pre-approval, and he was also talking to an online lender. We ran the numbers, everything is good. And at the end, he said that the online lender is cheaper, is $2,000 less in closing costs. And I said, that's impossible, because at the end of the day, all lenders should be pretty much close, right? You won't see big differences. You'll see a small difference, but it won't be big differences on the rate or closing costs. We should be somewhat the same. So when the client said, $2,000 difference in closing costs, I knew that's not right. So I said, okay, so let's get the fee worksheet. Let's compare it apples to apples. So when we compared them to, just like I mentioned in the video earlier, is they literally had as PEOC, paid outside of closing for the appraisal, this survey, that alone, those two items is $1,000. And then what they did is they did the same thing with the taxes and insurance. They did not do 3 months in reserves. They only did 2, and that's an extra grand over there. So these 3 items added up to the $2,000 difference. So at the end of the day, when we compared them, we were pretty close, almost exactly the same. So I think that online lenders, and I don't know if they do this intentionally or if it's an accident, but it is something that I would love for you to be really, really careful about, okay? And make sure that you listen to your real estate agent. They will probably tell you to work with a local lender, not someone who's in a different state. And there's a reason for that, because we're looking out for you guys, okay? So whether you're working with me or a different company, different lender, make sure you always trust and talk to a local lender as well. Check them out, make sure they have the great reviews. If you have an online lender and you can't pull up the loan officer, the loan originator that's working with you on the loan, that should be a red flag, right? Because if you can't find them individually and how they work with clients, how are you going to know what the process would look like? So just wanted to put this video real quick together for you. Hopefully you find this helpful. If this is something you're interested in, make sure you subscribe and hit the notification button. And thanks again for watching. Check out this video over here, and I'll see you in the next video. Thank you.